Delinquent tax sales. Are you onto something good or is it a big stinker? And I will answer your question in this video, and I'm going to show you some amazing things you can do with delinquent tax sales that you probably never heard of, never thought of, that are ninja techniques to make you a lot more money. So let's talk about what delinquent tax sales are. That is when property is sold because someone didn't pay their real estate taxes, typically for 3 or 4 years. So the taxes get so far behind that the county says, well, look, we got to collect these taxes. We got to pay the fire, the policeman, the mayor, keep the library open, fill the potholes, collect the trash, blah, blah, blah. Got to do all that. So they will put the property up for sale to the highest bidder, and the minimum bid is just the past due taxes. So probably if you're 3 to 4 years behind, you probably owe 15, maybe 20% of the value of the property, and you can be the bidder that can win the property potentially as low as 15 or 20% of the value. Now, is that typical? No, not if you do things the conventional way. If you do things the advanced way, I'm going to show you later, then yeah, it is possible. But for the conventional just bidder that's going to do it like everybody else, probably buy it for 70 to 80% of its retail value, take into consideration repairs. So that can be a very good deal. And after all, if you're talking average house in America that's a $400,000 house, you get it for 80% of value, you just bought that for $320,000. Good deal in anybody's book, right? Of course. So it can be good, but there are things that you need to know about these delinquent tax sales that are very important. First of all, these are cash deals. You can't get a mortgage to pay for them. There's no traditional settlement. You have to have cash typically at the time you bid on the sale, or no later than the same day. You got to be wiring money in. So this is not something that you get a mortgage on. So that's number one. So it is a cash game. Number two, there are no warranties or guarantees of any kind. They don't do an open house. There's no home inspection. There's no contingencies. If you bid on it, you pay for it, you own it for good, bad, or different. And in delinquent tax sales, sometimes there are great properties up for sale, and other times there are useless things that nobody should ever buy. And let's give you an example. They'll sell a landlocked parcel with no utility services. So it's just a parcel of land that's stranded between other houses because there's no road that goes to it. And there's no water, there's no sewer, no electric. Well, unless you're going to visit by helicopter, you have no way to even access that property, so it's useless. You don't want it. They'll have other ones that are strips of land that were for utility easements that were never used or development that was never done. Again, do you want a 4-foot wide strip of land? I don't know what you do with it. Not useful for anything, so no. So what you need to do with delinquent tax sales is make sure you do your due diligence and understand that process really well if you're going to bid at the auction. So the way that you do that is you're going to get the list. It's available about 45 days ahead of the sale. You start screening the properties. The easiest way to do that initially is just go on Google Maps, look on Google Street View, type in the address and look at the neighborhood, look at the property, see if it's anything you're interested in. If it's not, cross it off. If you're interested, star it and move on to the next one. Go through the list that way. And then 3 or 4 days before the sale, look at the list again to see what's still left on the list, because what will happen is like 90% of the people are going to pay the taxes that are past due on all the valuable properties and properties that are actually worth something. So your list goes from like this big to this big. And it's just because people at the last minute are like, oh, I got to pay these taxes, otherwise I'm going to lose my house. So they pay them. So then you get your short list. So these are properties that looked on Google Street View and they're still available. Then you go and drive the properties. You want to take a look at them. You don't have permission to go inside, so the best you can do is look from the outside. Look from the outside, look for evidence of water damage, look for evidence of fire damage, look to see if it's occupied or vacant, and learn as much as you can about the property. If there are for sale signs in the neighborhood, call and find out how much the house is going for, because you want to get an assessment of how much the places are worth. So that process, you're going to circle the ones you love. I usually take a picture of each property. I write up a little condition report, like what did I see there? Is it occupied or vacant? Does any evidence of water damage or fire damage? What are houses going for in the neighborhood? Anyway, you write up a little report, and that's you getting ready to bid. And on the day of the auction, you have to be ready to bid. You have your short list, you have your properties, you've looked up values of competing properties in the market, so you look on Realtor.com or Zillow, see what places are going for and have gone for, so you have an assessment of value, and then be prepared to bid. If you're a fix and flip bidder, you got to get at least 30 or 40% off of retail minus your fix-up costs, so take that into account, and be conservative because you want a deal, not a bad deal, so be careful. If you have doubts about something, skip it and go on to the next one. If you're the successful bidder, typically you're paying for it right then and there. The way you can tell that, when you get your sale list, they're also going to have something called conditions of sale. And that's going to tell you when you're supposed to make payment, how you make payment. Do you wire money in? Do you drop off a check? How does that work? They're going to give you all that information so that you can be a successful and compliant bidder. So when you are the successful bidder, they'll give you a deed to the property, usually not right away. Usually it takes some amount of time, depends on jurisdiction. Could take a week, could take a day, could take a couple months. You can ask before the auction and they can tell you how long it typically takes them. Once you're the deeded owner of the property, then you're free to go fix it up, to resell it, do all that. So really, really good from that aspect. But some challenges with this business, often there are title problems. Sometimes former owners will file lawsuits to overturn the sale. You got to fight that off because it's not a friendly process, it's an adverse process. If there's someone in the house, you're responsible for getting rid of that person. So you have to file something typically called an ejectment action, which you need an attorney to do, and that costs money. So you got to build a big margin into these things because you don't know if you have to do an eviction, you have to deal with the title problem. So that's why it's important to get a margin of at least 30 to 40%. Now there's another two ways to play this that I think can be even better. One is overages, that's the business that I do, and the second is buying using a post-auction method that my friend Tony came up with that is amazing. Absolutely amazing way of doing the business, where he basically just gets lists of properties that are available to purchase, just lists the cost, and he can leisurely go look at them, buy the ones that he wants at a fixed super low price. Usually that price is like a year's worth of taxes, so it's super low. I think it's amazing. And I sat down with Tony and did an interview. As a matter of fact, it's here on YouTube, so I'll put a link up here. Go watch the interview that I did with Tony, either in the link up below if it's there. If you don't see it there, then it'll be down below in the description. Go check that out because Tony came up with a really amazing system and way of buying properties that is like far better than going to the auction. And he's the one that invented it. He knows it. And I did this 20-minute interview with him. It's very short and concise, completely free. It's on YouTube. And if you want to go further, you can learn how to do the entire business from Tony. I think it's really worthwhile. So that's one. The other option, I do the overages business, which has to do with helping homeowners that have lost their property to foreclosure get back big lump sums of money. And I do that every day. That's what I do for a living. I think it's wonderful. I help people. I make great money. I did an intro to that business in a second video, just the intro to the overages business. It's really amazing, low-cost business to start. It's a really neat offshoot to the tax sale auctions. And it probably tells you enough. I basically stopped buying at tax deed auctions because I think overages is far, far better, and Tony's method is far, far better. So we'll let the beginners go to the auctions and we'll just do the other stuff. So if you want me to show you what the experts do, that's the way to do it. So go check out the intro to overages video. That's only 10 minutes long. It's short. I give you an introduction to that business to help you determine if that's a business for you. Next steps for you, go check out those two videos. If you like this video, give it a thumbs up and subscribe to the channel. And if you have any questions, put them down below. I'll do my best to get to the questions I can. So this is attorney Bob Diamond. Thank you for being here. Go watch the videos and I'll see you over there.